Welcome to the Explainer. Today we're diving deep into the numbers of Japanese chemical giant Asahi Kasei, giving it a full financial health check based on its latest earnings report. So let's get right into it.
Right off the bat, you open up the report and this number, wow, it just leaps right off the page. A massive 42.2% plunge in net profit compared to the exact same time last year. A drop that steep is enough to make anyone a little nervous.
So, a drop like that, it makes you wonder, right? Is this massive company, a pillar of Japanese industry, actually in trouble? That's the big mystery we're going to solve today.
But here's where it gets interesting. You dig just one layer deeper and the story gets, well, complicated. Take a look at this. While that net profit number looks awful, the company is operating profit, that's the money it makes from its core day-to-day business, it actually went up by 7.6%. So the main business got more profitable. Where on earth did all that final net profit just vanish? All right, to solve this, we've got to pop the hood, We need to perform a little corporate surgery and look inside the company's three main divisions to see what's really going on. And boom, this chart tells you pretty much everything you need to know. It's kind of like a family drama, right? You've got the healthcare division, it's just killing it, bringing in an extra 7.1 billion yen. Housing, also looking strong, up 5.3 billion. But then you see that third bar. Oof. The other two are basically dragging along this huge, struggling materials division, which lost almost 10 billion yen. So, that massive hole in the materials segment, it basically forced management's hand. They had to make a big, and I mean very, expensive decision. Okay, before we get to the big number, we need a quick vocabulary lesson. Let's talk about special items. Just think of these as things that happen outside of the normal day-to-day business. Stuff like selling off a factory or a huge restructuring. They're one-offs, but man, they can totally change that final net profit number we saw earlier. And here is that one-off item. Almost 30 billion yen. That's what Asahi Kasei booked as a special charge for what they're calling business structure improvement. We're talking about roughly 190 million US dollars, just for context. So, there you have it. That's the smoking gun. That scary 42% drop in profit, it wasn't because the company suddenly forgot how to sell things. Nope, it was a deliberate and incredibly costly but strategic move to basically cut off the unprofitable parts of its struggling materials business. And this wasn't just some sudden panicked decision. This expensive move is actually a key piece of a much bigger multi-year plan for the whole company. Let's zoom out and look at their master plan. Yeah, check this out. When you lay out their recent moves on a timeline, the strategy becomes totally clear. They're buying up these high-growth, high-margin healthcare companies, while at the same time, they're shutting down or selling off their older, lower-margin chemical businesses. It's a complete pivot. And you don't have to take my word for it, the company says it themselves. They're not just trying to patch up these old, struggling businesses anymore. They're actively accelerating the structural transformation, basically getting rid of them to focus on what's next. And let's put some numbers on this. Just a few years back, in 2021, those businesses they're now restructuring, that profitability improvement slice, that was the biggest piece of the pie. It made up 41% of the company's profits. Okay, now this is what's really wild. Look at their goal for 2027. They want those struggling businesses to shrink all the way down to just 10% of their profits. And that strategic growth slice, led by healthcare, they want that to be about half of all their profits. They're literally trying to change the entire DNA of the company. Okay, so they took their medicine, a very expensive dose of it. So what's the prognosis? How does Asahi Kasei see its own health for the near future? Well, this is where the story takes one last, really surprising turn. Get this. Despite that headline-grabbing 42% profit crash, the company has actually raised its financial forecast. Can you believe it? They're telling the market things are going better than they thought. This is what solves our mystery. The bad news was all part of the plan, and it's actually given them more confidence. And we're not talking about a tiny little bump either. Look at this. They've boosted their operating profit forecast by over 10%. But the real jaw-dropper is that bottom line, their net profit forecast. They've jacked it up by a massive 45%.
So, why the sudden optimism? Well, it boils down to three key things. One, their new growth engine, healthcare, is firing on all cylinders, even better than they expected. Two, those cost cuts they just made in the materials division, they're already starting to work. And three, they're planning to cash in by selling off some other investments.
So, what's the big takeaway here? It's that a really shocking headline number can hide a much more interesting story, a story of a deliberate strategic transformation. Asahi Kasei is taking a huge short-term hit, betting it'll lead to long-term success. And that leaves us with the ultimate question, doesn't it? Will this incredibly expensive gamble to pivot from old-school materials to new-age healthcare actually secure their future?